Cliff, welcome. It's good to have you here. And let's start with Mosaic. What would you do with the stock?
Good afternoon, Kelly. Longer term, there's no question that we're going to see a demand increase for fertilizer, especially as we run into disruptions as the world transitions away from globalization and the food and ag supply chains get reshaped. In the short run, though, there's really a lot of uncertainty and a lot that's outside of the firm's control, especially from a pricing perspective. It's a commodity business, so they don't have much in the way of pricing power, though the vertical integration as it relates to phosphate can help with margins. But more importantly, on the input side, ammonia, which is a natural gas derivative, is a key input into their products. There's just so much uncertainty right now related to Russia, Ukraine. The Nord Stream pipeline is going to come back on later this week. We're just not sure. So there's a scenario out there that's extremely damaging to the results of the stock, and we just think there's better places to put capital in these uncertain times.
And one of them might be Meta. Is that right?
That's right. So Meta is one of our higher conviction names going into earnings season this year. It's down about 55%, well, before today, from the 52-week high. Trades at 12.5 times next year's earnings. And in the most recent index rebalance, it actually got put into the value bucket. So it's not a name that you buy because it's cheap. Everyone knows it's cheap, but it's a name you buy because it's cheap and because growth is getting ready to reaccelerate. We're really bullish on the real story. There's just been very little ad monetization so far, and we anticipate that is likely going to be picking up here over the coming quarters. We also think that their AI and their algorithms are going to get better at driving content, similar to like a TikTok or a Snapchat. So we do think that could lead to an uptick in engagement. Who knows if we bottomed out?
Let me just say, who knows whether it's bottomed out? Do they really have a first mover advantage on the metaverse?
Yeah, I think they have a first mover advantage in the metaverse, but really that's not the thesis for us behind the stock. Metaverse is really a much longer term project. We're talking 5 to 10 years before we really see any sort of meaningful results. So we're much more focused on the real story at this point, and the metaverse is really more of a side project for now.
All right, let's move on to Goldman then, Cliff. What do you do with this stock?
We're not a huge fan of financials in general, late cycle here with recession risk being elevated, but we will make an exception for Goldman Sachs. The earnings per share number was down about 48%, really driven by a slowdown in investment banking, but that was already in the price. And so I think that's why you've seen a really nice reaction post the results. Trading revenue, which is typically counter-cyclical, actually held up really nicely. We know the story there, rates, FX, commodities. But we do like the fact that they're being aggressive with adding businesses that can add some diversification and more steady income streams like asset management. It's single-digit PEs, 1 times book value, which if you look back historically, it's been a great place to take a shot. So Goldman is our favorite financial going into the end of the year.
You would avoid the rest of the space, though?
Yeah, by and large, we would especially avoid traditional banks.
Okay.
And they have that really high beta to interest rates and especially to the yield curve, which, as we all know, has flattened out and inverted. So really not big fans of your traditional banks in this environment.
All right, but sticking with Goldman. Cliff, thanks so much for your time today. We appreciate it.